All right, here we go. Forex market trade of the day, ladies and gentlemen. I want to follow up today on the Canadian Japanese yen, which seems to be on the move. And we've been anticipating this this negative momentum because we were chasing a downside move on the Canadian Japanese yen. If you remember, we started off right off the top when pricing was starting to turn around, right off of 108.17. Which is the last line of resistance inside of that range that the Canadian Japanese yen is trading ever since early January. Now, this is from the short to medium term perspective. Long term perspective, we already talked about the downside potential, which is quite there's a lot of downside potential looking at the big picture situation. Let's take a look at that. First, we'll start with the monthly chart. We talked about the downside potential to 103.40. We designated 103.40 being our primary target and final destination. Looking at this from the weekly perspective, if you remember, we started to get very interested here when price action went up all the way to the last line of Fibonacci correction, by definition 76.4, represented by this blue dotted line. And ever since then, we've been bearish on the Canadian Japanese yen, but we knew there's a long way to go to 103.40, so we had to break it down into digestible pieces, and that's pretty much what we did. Now, looking at this from the from the daily perspective, from the daily chart, representing the short-term cycle, and I've talked about that before. We wanted, well, first we closed out our short position when price action got very, very close to 105.28. The concern was that pricing was going to go back up and keep trading sideways like it did ever since, like I said, ever since early February, late January. But what happened was it started to turn around, but it couldn't sustain that upside reversal and got rejected off 106.20. And that was pretty violent because it ended up very negatively and on the way breaking below 105.28, which was our trigger to jump back into short position. Right? We wanted to secure that breakdown. Up until that point, we had accumulated quite a lot of profit on that position, and the risk was starting to outweigh the reward, so we got out. But then price action did that and broke below 105.28, and we immediately, well, first we wanted to wait a little bit to see how it goes, and it started to come back up to test 105.28 from below. As it did, you can see we pulled the trigger the first time. Now here's where we want to go. We want to go all the way to 103.40. There's a long way to go. I'm pretty sure we're going to be able to squeeze in a few more trades before we hit the target, but I really like this negative momentum that is starting to pile up, right? So yeah, stop loss level also was adjusted as you would expect. Right now our official stop loss level is at 106.6, still having a healthy distance from price action, but definitely the next step would be to keep tightening up that stop loss level. We just want to make sure price action is going to end up on the negative note today, by the end of today's session. All right, so there you go. Quick update here on the Canadian Japanese yen. I just wanted to let you know we're still here, holding tight, chasing that move, riding that wave all the way to 103.40, our final destination. So we'll see how it goes. In the meantime, guys, I want to wish you a nice trading day. We're going to be back tomorrow, same time, same place. Take care. Good morning, traders, and welcome back. Forex market watch list is on the menu today with the Australian dollar versus the Japanese yen. This is probably our top favorite pending trading opportunity. We're already got the green light to engage. And when I say that, I'm talking about the big picture situation, which we've talked about before. We've been following up with the Aussie Japanese yen. Ever since I started to draw that trend line where price action broke below and then came back up just to retest that trend line from below. It also was testing 101.31, which was the top resistance key level, and it couldn't really penetrate. Instead, it started to turn around. Now, on its way down, we knew that there was a missing link here, because when price action was on the back foot back in August 2024, it was supposed to reach the big key level support of 88.92, but it missed it by a tiny margin. And then an upside reversal started to ensue, and we had price action basically having a technical correction, that big drop coming off of 109.30, right? Now we see something quite interesting. Price action is literally jumping over 95.47, which is our trigger level, because that suggests that price action is breaking down below 95.47 on its way to that same 88.92 that it missed a few months ago. So I believe it's going to finish up the job. It's going to hit that area, solidify a touchdown, and potentially even penetrate into the lower section of that range. So that's the big picture situation. That's where we're coming from. We also see on the monthly chart right now, on the monthly session that we're currently in, we can see how price action went up at the beginning of the month, basically tried to break back above 95.47 after the gap, right? Because it jumped over and it went up, but it got that rejection. You can see now it's turning negative, just leaving a little spike slicing that 95.47. That's a strong indication that price action is will continue this bear cycle, all right, and move to the next big one, like I said, 88.92. Let's take a look at the short-term perspective from the daily chart, because here, like I said, this is a pending trading opportunity, meaning we have a trigger level before we're going to jump into position. So I gave you the overall overview coming from the monthly chart, right? We have a green light. Now we need a green light from the execution chart, which is the daily chart representing the short-term cycle. Because if we're going to get in now, price action might still keep trading sideways in this very narrow range, right? It started trading sideways at the beginning of February. We had the 1, 2, 3, 4. So a few back and forth here. Obviously, the main concern, getting in, not in a timely fashion. So if our timing is off, we might see price action going back up, back to 96.20, and then later down the road turning back down again, and then we'll have the big breakdown. So we need to time the breakdown as best as we can, which means 94.06 here at the bottom represents the last line of defense locally for the short-term cycle. So if price action starts to break below 94.06, establish itself below that area, there's a very good chance that the move to 88.92 is gonna start to kick in. Until then, there's a good chance price action will continue trading sideways just casually. So it's either we're gonna pull the trigger when price action will break below 94.06, or alternatively we'll wait for price action to come back up to the upper section of that narrow range, and around the levels of 96 and some change, we're gonna drop the hammer and we're gonna get into position in that upper section, getting a much more attractive price. So, but the official trigger for us is 94.06, all right? And that's what we're gonna be jumping into position when pricing starts to slide below that area. So there's a lot to look forward here when it comes to the Aussie Japanese yen. We're ready, literally with our finger on the trigger, waiting to execute and activate a new short position, aiming at 88.92. That's a big move. We're talking about medium to long term type of trading opportunity, if you will. Alright guys, so there you go, Aussie Japanese yen, top favorite, pending trading opportunity on our watch list. We're going to come back to this, follow up, keep you posted. In the meantime, we're going to move on to the next video. See you there.